Hello creatives! In this video, I'll help you answer the all-important question, how much car can I afford? I'll help you arrive at the answer using the 24-10 rule. I'm sure you'd love to walk into a car dealer, pick a car that you like, and pay in cash. But how can you afford a car that you can't pay in full? The truth is, not everyone can afford to buy a car in cash, and that's why you need to know and understand this simple, important rule of 20-40-10, which in my view is the most practical way to afford a car. The rule dictates that you deposit at least 20% of the car's asking price and pay the rest in less than 4 years without spending more than 10% of your income on the car's expenses. I'm going to elaborate on the 24-10 rule, discuss why the values are important, and provide you with practical tips to comply with it. My goal is to help you buy a car affordably and comfortably. But before then, if you're new here, consider subscribing to this channel to continue receiving great videos like this one. Don't forget to hit that notification bell so you get informed every time I publish a life-changing video. So, here we go. Why a 20% down payment? By setting aside 20% deposit, you're achieving several things. For one, it boosts your chances of getting more money from the lender, and that means you'll pay lower interests for the loan. Also, your car financing is likely to be approved faster once you give the assurance of depositing 20% of the car's asking price. The other reason is that new cars depreciate faster within the first year and are likely to lose up to 20% of their value. So, making a 20% down payment means you are paying for its depreciating value up front. If you don't do it and a dealer decides to repossess the car, you'll be in debt, and that's something you wouldn't want. What if you can't afford to raise a 20% deposit? Then it's smarter to go for used. Often, you need to deposit 10% if you're buying a used car. That gives you a smaller budget to work with. Why a maximum term of 4 years? Remember, new cars typically have an 8-year life expectancy, so it makes sense to only pay for it for less than half its lifespan. Also, keeping the loan repayment period short means not tying yourself to the car. As a result, you can sell it after 4 years. And since you'll be selling it before its life expectancy runs down, it's easy to get a reasonable price for it if it's in good condition. Yes, you may pay higher monthly payments than someone on a long-term loan, but you enjoy lower interests when the term is less than 4 years. It would be best if you targeted to pay for your car as quick as possible to enjoy reduced interests, and that's what you get with a term that doesn't exceed 4 years. Why not spend more than 10% of your income on car payments? If you aren't careful, auto payments like insurance, road taxes, and loan repayments can drain you financially. That also goes for fuel, licenses, parking, and maintenance. That's why the 20-40-10 rule dictates that you limit the expenses to 10% of your gross earnings. Remember, you still need to have some money left for your emergencies and savings and not forgetting the household bills. So you can't risk spending more than 10% of your gross earnings on car payments. Besides, cars depreciate with age. The older they get, the less their value becomes, which means that you may never recover your money. So what should you do when its expenses exceed 10% of your gross income? Well, then you should get a more modest car. That means if your gross annual income is $40,000, you should get a car with payments that don't exceed $400. How about if you have other debts? If you have other debts like mortgage, student loans, and business loans, then use the 36% rule, which dictates that you shouldn't allocate more than 36% of your gross income on debt repayment. Why is the 24-10 rule important? Generally, the 24-10 rule helps you manage your finances and stay within your budget when buying a car. Even if you don't follow it as is, the rule has principles that can help you maneuver the car market wisely. This rule helps you determine if you can afford a specific car, and that's the first step to buying a car. By paying 20% of the car's asking price, you cover its depreciating value for the first year, as I mentioned. And by looking for a financing solution that doesn't exceed 4 years, it means you get to pay the loan quicker with lower interests. Last but not least, Keeping your car payments below 10% means you can pay for its maintenance comfortably without messing up your household budget. How to save up to 20% for a car and comply with the 24-10 rule. One thing is of utmost priority when it comes to the 24-10 rule. You should be able to make the 20% down payment. So how do you save up? Here are some things you can do. Be cautious of your spending. If you're planning to save up enough to get a new car, you have to watch your spending. It may mean cutting back on some expenses like cable TV, internet, and dining out. It also might mean shopping for groceries with a list and leveraging discounts. Open a savings account. You can also set up a car savings account. Remember to shop wisely for a savings account that earns interest. Automate your savings. If you find it tempting to spend your savings, automate your finances with a tool like Chime or Capital. These tools allow you to automatically transfer a specific amount of your income to a savings account. Find a side hustle. Raise more money by finding a side hustle. You can work part-time as a waiter, tutor, sales agent, babysitter, dog walker, or anything else as long as it earns you extra income. How to get the best car deal while applying the 24-10 rule. You can get the best car deal while applying the 24-10 rule using these tips. Number 1. Shop around December. During the end of the year, most auto dealers are trying to meet their end-of-year goals. Some want to unload previous models and bring in newer ones. So the chances are they'll compromise on the asking price, and that presents you with the perfect opportunity to negotiate for a lower rate. Number 2. Say no to extras. One tactic that car dealers use to rip you off is adding extras to cars. You may find dealers asking to pay you more for things like rust-proofing and upholstery protection. Others will charge you for extended warranties, something you don't need when buying a new car. The solution is to not pay for the extras. If you have to, make sure it's something you need. Check out the video linked above and learn how to avoid car dealership ripoffs. Number 3. Leverage graduate auto deals. Nowadays, so many car dealerships have car buying programs for recent graduates. These programs allow you to buy a car with flexible terms, and you get to enjoy advantages like special financing and rebates. So, if you're a recent graduate, inquire about these deals from the dealer. Number 4. Let car dealerships fight over you. When I was planning to buy my current car, I had to approach several dealerships. I told them what car I wanted, and I mentioned that I would only go for the lowest offer. Guess what? So many offers came, and all I had to do was compare them, and I finally settled on the car I'm driving now. So you can also consider this tactic, of course, combined with the others. Things to remember when applying the 24-10 rule. Remember the following when shopping for a car and applying the 24-10 rule. Number 1. Focus on reliability first. While you've got to buy a car that you can afford, it has to be worth the money. You shouldn't spend money on a car that'll break down the next day or one that you'll struggle to service and fuel. Number 2. Stick to your budget. You can't overstretch your budget when shopping for a car. It would be best if you didn't sacrifice your household expenses for the vehicle. Given that the rule states that you make a 20% deposit, find a car that you can comfortably pay down. Remember also to consider your household budget when calculating the monthly payments. Number 3. Assess your pre-financing options. Most buyers don't know this, but car dealerships' financing options are usually expensive. They attract higher interest rates, something you want to avoid when you're on a budget. So instead of rushing into agreeing to dealership financing, consider other sources first. In particular, consider banks and credit unions if you have a good credit history with them. Compared to car dealerships, banks and credit union loans have lower interest rates. Number 4. Shop around. You don't have to commit to the first dealer that you approach. So learn to shop around. The more you do it, the likelier you are to compare different asking prices and rates. It provides you with more options, making it easy to settle on a car that you can afford. Number 5. Negotiate the terms. You don't have to accept the first or the second offer that the car dealer suggests. Depending on your budget, learn to negotiate for lower amounts, not to spend all your savings. Walk to the dealer confidently, pick your preferred car, and start negotiating. It's easier when you have the down payment ready and enjoy a good credit score. If you can make a more significant down payment, that's even better as it gives you more leverage during the negotiation. In conclusion, anyone who is budget tight and can pay for a car in full should find the 24-10 rule useful. It helps you stay within budget and still get the right car, one that meets your needs and it's affordable. I know this video was exciting and you loved it. Also check out these exciting